I can't take no loss. I don't even know what it costs. I hit the ground.
Hi, and welcome back to the Conscious Day Trader. Today is going to be another video on the pound dollar. ICT trading every time, breaking down previous buyers, previous daily highs, previous daily lows, looking for equilibriums, looking for liquidity. I mean, if you've been following my journey, we did predict this move. You can see it from the screen there, a little sneak peek into this pink zone, which has been our daily target for the pound dollar to move to get liquidity. And then we said we're not sure what will be the next move, but we were quite confident to trade above that pound. Hello, Phoenix. To trade above that daily high. So today, a bit special, we're also going to see a little bit about Bali. You've requested a bit of a Bali vlog. I'm just going to throw a teaser in there today, and I'm going to ask you to comment below if you want these videos separate than the breakdowns, or would you rather a big video on Bali vlog and then breaking down the trade, keep it all together in one, or would you prefer one trade day, one vlog day? As you've noticed, I don't post as often as I would want to. The daily posting was quite easy when we had family and we could help with the kid, with our little buddy. But at the moment, it's going to be, I'll post as much as I can when I get out of my free time. As much free time as you can have being a dad. But I do want to show you what life is. I got so many nice messages on Instagram about, show us about Bali. What is it like? How much does this villa cost? How is so many questions about visas and all that, which could be a completely different channel. But I don't have time to run two channels, so I'm going to try and bring both of that into the Conscious Day Trader, which is pretty much daily trading from Bali, mainly the pound dollar. You won't see me trading anything else. And someone will say, but ICT doesn't trade Forex. And yes, if it works for you, and it has been working from the 1st of January, we haven't had a red day. That's 3 months. 3 months of daily trading and no red days. And it has been working for me. And I do understand the pound dollar. I'm in tune with the news around the pound dollar because obviously I'm half British, so I do follow the UK news. And it makes it easy. I know exactly what's happening on the chart. And I know I can predict how big moves can happen. Even these big moves here that let's jump onto the charts for a second. And move myself from that place. Even this move here, you might be thinking, wow, if you get caught in this, how the hell are you going to manage that? But that's pretty much, if we look at the 4-hour chart, that move here is a couple of days. So we did anticipate that move into the pink area, and we're going to go in detail about breaking all that. But before we do all this, and before we go into our analysis, we're going to switch it up a little bit, and I'm going to show you a little bit about Bali. So let's jump into that video just now. heading to?
To the pool.
30 degrees. Just got back from Kuta. We went shopping. And now we're back and we're heading to the pool with the little one to cool down. Because it's panas as they say here. Extremely hot. Okay, so there you go. That was the vlog. But let's go back into what you're here for, and it's like, how the beep do I trade the pound dollar on a bank holiday like Monday? And let's go on to, before we do anything, let's go on the 15 minute and let's go on to Monday early hours. So we're on London time. So if we go on to early hours, you will see that we had that creeping move up, slowly pushing up because liquidity, the volatility was quite slow. And if we add our favorite indicator that shows us the FX markets, and unfortunately, because I use VPN on a lot of things, it hasn't reset it. That's good. So we've got it here. So this was the London session from 6:45 all the way to 10 o'clock. And it pushed away, creating what you would call a Judas move. However, past the London kill zone, it pushed higher to take liquidity above this area here. Okay. And that created today's, which is Tuesday, previous daily high. So Monday's daily high was created at this moment here. Now, I didn't trade this move down here because this was in between after the London kill zone, lunchtime into New York, created the low just before the New York open. And I saw that late at night, it would be about 8:30, 9 o'clock at my time. And I entered two positions after this push up. How did I enter? If we go on to the 1 minute and we go back to that previous daily low, ICT, obviously fair value gaps. Sometimes you just need to see the break of structure and you know it's happening. If you can see this uptrend form here, this was the low. I wanted to get involved soon as we broke those highs here. I had a break of structure, filled the fair value gaps on this side here. And if we go on a 5 minute, it will make it. If you can't see it on the lower time frames, I can tell from experience that fair value gaps are there and where roughly they are on the 1 minute. But if you want to see the textbook fair value gaps, just go a time frame up and you will see it more clearly. If we take the replay and we take it out here, we had a break of structure on this area here. So now you're waiting for a breakdown to enter on a fair value gap there. Let's see how far it took the market before it would fill you in. If we go a few candles forward, boom. So that would be your entry. And it never really broke the lows. It came up. So if you were targeting, I targeted around $400 for this because it was Easter and I wanted to be in and out. So I targeted for, I still got paid and really well. I got 20 pips on two positions. So 40 pips, $422. We're going to see that on the MT5 soon. But if you're targeting for, let's say 20 pips and you entered around the bottom of that fair value gap, that would target the top of this level here. You would be 30 pips. So a lot of room. And you could also be moving back into these fair value gaps. So a lot of things that will come in. Now, where would be, if you're seeing some levels, these are the scruffy levels that I use. And if you don't know who the Scruffy Trader is, go and check his YouTube. Excellent trader, and he's taught me a lot of things. I normally have these levels on the back, and even if I'm trading ICT, I like to flick them up to see how things from different people can correlate, and it just gives you a better increases my sort of understanding around what's happening with price levels and so on. Do you need the levels in? No, because you've got your previous daily high, previous daily low, break of the previous daily low, attacking liquidity. When liquidity is being taken out with the ICT, if you don't know what I'm talking about, go and check the 2022 mentorship, and that will explain every single word that I'm speaking in detail. 42, I believe, lessons he's got in there, and it will make sense when you look at that. So we have a very clear structure here, fair value gap in. But yes, what I was saying is I like bringing these up because you can see they don't always, when you're using one methodology, you won't always identify it. For instance, this would be a level here, and that would be another level, and never came down to that level if you were trading down there. But I do like bringing it in, and especially the Fibonacci extensions, where they really get respected really nicely. And we're going to see that in the next sort of discussion when we're going to break it down from scratch. Not quite from scratch, because I do want to trade today, so I don't want to take all my levels out and everything out, but we can hide them with the help of the tree. So enough of that. So we saw this entry here, got in. Even if you were going for 10 pips, if you wanted your tight stop below that low there, 10 pips there. If you were going for your 10 pips, you're just looking for that move there. Some people aim for that, and 10 pips can be a lot. If, for instance, you're on a 2 lot size, that would be $200, and so on. 5 lot size, $500, and then you can trade bigger size. Obviously, with a bigger size, though, you would be risking a lot more, and a drop down here, if you're risking 10 of that, would be $100, and so on. So you can manage it on your way in and out. As you can see, this big gray area is a 4-hour fair value gap that it targeted, and I wanted to get involved in this. Now, if this had gone wrong, so this crash continued down, the most logical area that this area will be attacked is this liquidity below here, which is your sell side liquidity. Why? Because your profits from these moves here would be trailing their stops below the swing lows, and those swing lows very often come and get taken out for the liquidity. Now let's talk a little bit about that. That's the trade. And if we jump onto MT5, we had 400, and move my face from there, we had $422, 2 long positions, $219, $217, pretty clean, very good. I haven't imported any onto my journal. I'll do that today so you can see the progress, but we're still running on 100% green days. Super proud of that, and we're gonna hopefully push up. I believe, well, let's jump onto our, and here we are. This is the progress on the account. We're 27% we're on target, which we're being asked from our 200,000 account to make 10,000 profits before they give me a 250,000, which is crazy because that will be $250,000 account. And yes, I started this with 100,000. Every milestone, they've always been giving me a live account, and also I'm being able to withdraw money in 2 days. And if you have been watching this, you had that awkward moment where I withdraw the money and I couldn't withdraw money, and I spoke to the 5S super fast to respond, and they explained that any amount above 6,000 needs to be processed in a different way, and it happened really quick as well with a transfer. And so I'm going to be aiming to do 5,000 withdrawals every 14 days, just so I don't have to go through a different process. And the 5,000, it will be automatically into your deal account, and it's pretty quick. what I'm really liking about this month is my win rate has increased to 82%. And the reason for that is because I'm not doing so many repositions. My entries have been better, being more patient with my entries. 23 total trades, so not so many for the month. We're currently on the 11th of April, so plenty of days to, I want to be making around 8,000 to 10,000K months. So that way I can remove 5K of the month and leave the rest in there to build a bit of safety around the account. And as you can see, even though I'm trading on a 200,000 account, the actual equity on the account is I've got $11,228, this one here, which is in profit, and I can remove that 10K anytime I want. But as I say, I'm going to be aiming to do that every 15 days, which is 2 payouts per month, which I think will be working really well. As you can see, we're currently running on $2,670. We did have a bit of a difficult week last week. We had to wait for a little bit for our trade to work out. And we also we were on Friday, we went to a wedding in Uluwatu, which is a stunning area on the south side of the island. And if you haven't been there, I would definitely recommend visiting Bali, and it's absolutely stunning. And let me know in the comments if you do want to see more of Bali vlogs, the style like you saw earlier. Is this something that you want to see in these videos, or do you want it separate? That will also be helpful. And let's go back onto the chart. And what we're going to do is I'm going to leave this chart as is. The reason is I want to show you, well, you're not seeing what I'm seeing. So let's jump on this chart. Pound USD. Let's use a different broker. So that way, let's see, we'll go Forex. Let's go with forex.com, and what we'll do is we'll label that blue, and we're going to go here because I want to see a clean chart so I can show you from scratch what is happening with the pound dollar. Yes, there might be some fluctuations. For instance, here it's pretty close on the fair value gap. Let's go and analyze now from scratch. What did I see for this? And we're going to start with the daily. Now, the biggest thing on the daily on the pound dollar has been, and we identified this, was this area here. And we've been talking about this for a long time. Let's go to the top of that. And it'll be interesting to see where that top stopped. Where did it stop exactly? Round numbers are really key. And it was quite interesting to see how that 125,000, if I switch to my other pound dollar, this one, and you see my extension of the fib, if we go on to the 15-minute, you will see that 125,000, let's add into our levels, and this purple line, which was identified earlier, let's go on to the 1 hour, was respected really, really well. So we had that fib extension here of the 1618 and the 127, where we saw that the price is oscillating. And if you want to know how to do fib extensions, also you can see obviously the Scruffy Trader, but also the book by the Rough Guide. Rough is his name, so he's called it the Rough Guide. He really explains how you can retrace and trade Fibonacci really, really well. And it works really well with fibs, with fair value gaps, sorry. And this, for instance, this move retraced back into pretty much spot on to that fair value gap there. So we had this got filled. Let's look at this on the chart that we're already analyzing before we go to our clean chart, and you will find the areas that you've been used to. And let's close all those little levels. It came in and took that liquidity really, really well. And I was saying I was biased for a long time until this happened. Now I don't know. I don't know what's going to happen, because that has obviously been the target and it's happened. So the price can either now start retracing back down to these daily fair value gaps, or it can push up to these higher levels.
I can't take no loss.
This
I don't even
liquidity
know
here.
what
So
it
let's
costs.
start adding a new liquidity into my chart, which is the obvious liquidity above that area there. And if we see how that corresponds with any fair value gaps, we've got that fair value gap that got filled here. Next fair value gap is up here. So that will be a nice, interesting area to see if that price wants to come and fill that fair value gap. And that will be your buy side liquidity. If you are not following what I'm saying, let's add that fair value gap in there. Use the magnet so the price attaches to the wick. We've got a fair value gap in there, which will be the top end of that. And this is a daily fair value gap. And we'll drag that across. This is potential an area where the price can go higher. If we switch on the levels, you will see that that monthly Fibonacci retracement to the 61.8 is exactly on the bottom end of that fair value gap. Now, don't get confused. If you're here and you're looking for ICT, ignore the lines and ignore what I just said. Follow this fair value gap here. We also have a fair value gap above here. So these areas here are, if you don't have to be precise. Obviously, if you add a weekly in there, that will all become one. So then you'll know that this move from that wick down to here, it's all pretty much a fair value area where the price will want to come and retest if the price comes to the upper side. So what does that mean in terms of trading? So if I think that the price is going to be going up to this area here, obviously I want to be trading as low as possible. See the break of the equilibrium like it is now, see the previous day break, and potentially come and fill fair value gaps before it hits the upper side, with worst case scenario coming down to these liquidity levels. That's if my bias is long. If my bias is short on the other side, I want to trade down to these daily fair value gaps and below here. That's going to take, we're on the daily here, so this is going to take like weeks or months for this to potentially happen. So we had 1, 2, 3, 4 red candles. Okay, and with kind of equal volume, not big volume, obviously. So there's going to be a reaction to that. How much reaction that's going to be? Is it going to be going up there? If that was a breather from this move, that would make sense. If not, and it's just taking a breather, some profit taking from this, filling fair value gaps to continue lower, that's all down to play. And that's why when you come into every day, you want to be market neutral. Yes, we have a general bias and understanding what the price is doing, but we want to be generally quite neutral. So let's go on. Now we've done that. Let's go back onto our pound USD, the second one, which is clean. So we identified that area here. Buy side liquidity, like we said. And let's keep it quite clean. What's the obvious sell side liquidity that you would want to be in on the daily? It's going to be the lows here. Why are the lows here? Well, obviously because it's the lowest part in this area, these two swing lows. And also we have a fair value gap there. So that fair value gap from that wick to that wick is the extreme of the sell side liquidity. And that's going to be a daily fair value gap. So the sell side liquidity, if we took that one there, below there, and I'll just drag that across here and extend it like that. Okay, so that area there is our sell side liquidity. Now, how big this is, if there's nothing obvious, let's take the magnet out. If there's nothing obvious on the other side, you can pretty much make it as wide as you want to give you a bit more room. So it's quite, I'm not so worried about the width of that. It's more of a visual. What we're really worried about, you could put a line below this and seeing that liquidity is anything below this area here. So don't look at this and say, why why is this big and not that big? It's just so I can see it visually. All I'm worried about is the top line of that sell side liquidity, which will identify where the area is in terms of taking that liquidity before it charges to something else. Now from this move, is there anything else we need to add in here? I can see an obvious, two obvious fair value gaps, and I'll give you a second just to go and see from this move. Now, it will be interesting to drag a Fibonacci level from here to here and see. Let's just do it now. So that's the Fibonacci retracement. Okay. So if you had, in terms of like, let's do 2 trend lines, horizontal lines, you got your target of your 50% retracement. And that is on a daily, and you have another target of a 61 retracement. Okay, so these are the 2 areas of that move that the price, if it wants to retrace half of what it did, that would be a 50% retracement, and that's the 61. Also, if we keep the drawing in, the rough guide and Scruffy, they both talk about a break under the 23 to see the price coming down. Okay, we're pausing YCT for a second just to discuss this move here in terms of fibs and how I use fibs in my analysis. We've seen here it's been rejected above the 23. So if you want to trade this down, you would want to see a clear break below the 23 and a continuation down to the 50%. Is there anything else that we can add in here? If you want, you can add that 23 so you don't have to have it on your chart. So you got the 23, 50, and the 61.8. That will give you a picture on the daily when you go down into the views. Okay, we're starting to get the graph a little bit busy, so I might remove these later. But let's add the fair value gaps in. We've got an obvious fair value gap on the daily here, which got filled, but not all the way. And again, this is on our daily fair value gap. Is there another one? I can see another one there, but we've made the graph already quite busy and it's in the way. So if you can't see it, let's add the magnet, that level there till that level there. And that is another daily fair value gap. I think these are the 2 areas and obvious areas because this has been filled. Nothing else is not being covered. Okay, so not too messy from the daily. And as we go down the frames, this will expand up so you don't see so much stuff. So this is the area. Now, me personally, seeing this liquidity draw, I believe that this is going to have a push down. How much push and when? That is the question. Is it going to come up and take this liquidity above here, which we definitely need to put in? And I'm going to take that wick there because we've got a fair value gap on the top here, right? But instead of adding the fair value gap, this has been filled, that fair value gap, and this has filled up to this point. So the only part of this fair value gap that hasn't been filled is the top here. So to keep the chart clean, what I normally do is drag this line to the top of that. So it's part of the fair value gap that hasn't been yet filled. This is a bit of bonus on how I trade, and ICT doesn't do that. He would just fill that. And the reason I'm doing that, I'm going to label that buy-side liquidity. Because what we've done now is we've labeled this as buy-side liquidity, but we're also tackling that fair value gap if it's going to go up and fill. How far is that from here? Let's see. It's 313 pips. So 2 to 3 days worth of trading if that's going to go up. And what's the picture on the lower side? If this is going to come down to the 23 is 28 pips. 200, so quite closer for this to retrace before it goes up, if it's going to be biased long. And news-wise, we can see we have some events coming up. FOMC minutes on the 12th, which is tomorrow. That will be definitely rattle the graphs. On the 13th, we've got GTP, and then this little thing that says dollar pauses after strong gains on hawkish Fed. Bitcoin hits 30,000. So this is the information around that. You can easily use Or you can also go on something like Baby Pips and it will tell you the information there. Okay, so we've done that analysis now. Now we're going to go down to the 4 hour. Is there any obvious moves that we can see there? You can see how that plays out now. It's done, filled up the fair value gap, the buy side liquidity above those daily levels, which we've been talking for weeks, and it happened like magic. Came back, found support around that 23, filled this fair value gap live here, and now we're going to see if that's going to be a continuation down. It hasn't filled this fair value gap here, so I'm going to add this one. You have requested me, and this is going to be a bit longer because you requested me to show you step by step. Doesn't get more step by step by this. I'm literally doing it from a clean chart, analyzing each candle, what I'm seeing. And this is a 4 hour fair value gap. Now we can see that's being filled, so I can drag that to the bottom there. Now, if you see this and you're like, that's not the fair value gap, that's a wrong fair value gap, you go back to the video a few minutes ago and see how I explained. Because this has been filled, we're taking just the bottom of that part. We also have another fair value gap there, which I'm not going to add because if the price is going to come down here, it's already going to be how many pips? Let's see. 60 pips. So if it gets down there, then I will start looking at that. So I don't need to clog the graph too much. That's the big one. Obviously, we got 4 hour sell side liquidity below this area here. And that will be our sell side liquidity. Let's add it a little bit bigger so we can see there. All right, so these are the two areas. What we didn't actually include on this, which is one of the most important lines that I add in from the 2022 ICT mentorship, is the previous daily highs and lows. So we're going to add the magnet, previous daily high there, daily high, and previous daily low, exactly on that 4 hour fair value gap. Daily low. What we need is also the equilibrium level. I'm going to take that Fibonacci from that line to that line. The only reason I'm doing that is to take the 50% line, which we use a horizontal. And voila, just like that, a few clicks, and we need the equilibrium. We are set. As we are trading right now, we're pretty much in equilibrium. So what do we do in this occasion? We just wait. If I could get in at this point long, which I did yesterday, okay, that was great trade. Is this a nice area to go long? Not really, because it's just sitting at middle ground. You want to see an extended move. You don't want to be predicting the move, right? You want to be reacting to an obvious move. So if the move goes up here, that would be this area here, and it took out these highs. You know there's going to be a reaction because you're above this previous daily high. You're an extreme premium price, and you're going to see some reaction. If the price comes back down here, again, you're going to see some reaction from that. If it does nothing, yes, you can trade it, but it's higher risk. We can trade in here because we're on the daily, remember. We can still make money around this, but we just need to be more sniper approach into our reading, our ICT, fair value gaps and liquidity draws. If you're new to ICT, taking obvious trades will make it easier. And what I mean by obvious trades, this previous daily, so if we go 1 day back, that previous daily low would be here. Look how extended that move is, and it filled a 4 hour fair value gap. So from down here, you can be quite confident that there's going to be a reaction to the upper side, and you can take that trade quite confidently. Now, take it to today. This price is not in the extensions of either the previous daily low or the previous daily high. So we just have to wait. And it's early in this, it's 12:50 in local time. So if we look at London, we're at 6 o'clock, only starting to look at the charts. There's going to be a Judas move. There's a first day after the break, the bank holiday. So there's multiple areas that there's going to be moves today, and we're going to see that. Okay, so we analyze that, and then we can go down to the 1 hour. We put in our 4-hour information. That is what we traded, that on the upper side there. That gave me a nice, I only traded it for 20 pips, but that move was 70 pips. So I only took less than a fourth of that move, third of that move. So that was quite an easy trade. And as we can see, it never filled the fair value gap there and all the way down. Other things that I look at are from the indicator. So one of the indicators that I really like is the FX market session. And if we go into that, that would just show me the London session. I can put the New York session in there as well. And you can see from 1 till 10. The kill zone, I can't remember now. I would have to change that to put the kill zone in. But that is pretty much the whole New York session. I can leave that in there. And we can see that trade developing during the whole New York session there. Okay, so next, what I will see is how big these London kill zones have been. So what I want to do is go back into this and add my, at the bottom here, on where you can see pip. This area here, you can say what, I will just give you the day that it is. Then you can see the price that it went to, the top and the bottom, but I'm interested in the pips. The reason is I want to know how much has it changed from the previous days. So New York kill zone, or this is actually session, 71 pips, 47 pips, 68 pips, 75, 59, 45, 70. So the most that it's been is around 80 pips. 70 odd to 80 pips. So if I see a move in that area that's been above 70 pips, I know that something's happening, something out of the ordinary from the last 5 to 6 New York sessions. So I want to be being ready for taking positions. Same with the London kill zone, 37, 27, 40, 44, 59. 44, and that was a big one, 81.8. So this move here is out of the ordinary. What does that tell you? If it's out of the ordinary, you can do two things. You can either wait to see the reaction or what's going to happen and analyze on a bigger time frame, and then trade it back into this fair value gap, which worked really well, or you just stay out of it. If it's in the range, your London kill zone is like 40 pips, 40, 27, then you know that you're moving into a normal session if you want. That's a little tip that I also use for your step-to-step if you want. You asked for it, so you're getting a step-to-step. So these are the areas that I pay attention to. Then, risk. I don't like the word risk. It's almost like, because I'm not really risking. Risk means that I'm going in willing to lose that money, okay? I don't do that. I don't go with the mindset, I'm going to risk 2.5K. I don't want to lose that money. So I'm doing everything in my power to analyze the chart and give me enough flexibility that I can be right. And that $2,500 gives me that flexibility that if I'm wrong and I've gone in here and this comes back down to the sell side liquidity, with one position, that will be $800 loss. I'm okay with that, with $800, because I can reposition this because the market never crashes down in one line. Okay, it happened, even this here, look at that retracement. Even that here, look at that retracement. So if you're patient, you can get out of bad trades quite easily, I would say, unless it's like an enormous move. And you see this enormous move here, which has been continuous. Even though you can see from the wicks, the price came down, pushed back up, pushed up, pushed up. This area here, which is 150 pips in one direction, it still gave you this wick, which you can manage, and it still gave you this wick. Okay, there you go. We had a bit of everything. We had a bit of Bali. We had a bit of a trade breakdown. You had explanation of risk management. We did a step-by-step how I find trades and how I manage out of trades, how a bad trade can be managed into profit, and so on. I hope this has been useful. Let me know in the comments if you prefer this style of video where you have everything in one video like we said in the beginning, or if you want me to break them out. I am going to enjoy a fresh coconut from the fridge, and this is the benefit of being in Bali. Something like this will cost you like 50p, and it's incredible. So there you go. I hope you've enjoyed it, and I'll catch you tomorrow, definitely on the social media like Instagram, but videos, it will take me a little bit longer just because of life in Bali. One, it's really nice and you're enjoying life in Bali, but you also got the little buddy that is taking most of my time, rightfully so. So I'll catch you next time, hopefully very soon. Let me know in the comments what you prefer, and I'll try and deliver that. Today I haven't traded yet, and as you can see, this video has gone into like 3 different days, but it's 6:20 my time. The reason I haven't traded is because we have news. FOMC in the United States normally creates some movement in the market. So I'm waiting for that to happen. So it means I'm going to be trading quite late tonight if I identify a setup. If not, there's always tomorrow. And that's with trading. Don't chase anything. Just let the market come to you. And have a good one. See you soon.
I can't take no loss.